Hello, and welcome to our market alert video for today, which is July 15, 2022. And we got some terrible economic news this last week, which is, of course, as you I'm sure know, inflation has hit 9.1%. It's terrible and very concerning because the high cost of everything is going to affect the consumer negatively. Consumers represent 70% of our economy's consumption. And if they are shutting down or spending less on non-essential stuff because their cost of food and rent and utilities and all those kind of things are so high that they don't have discretionary money to spend on these other things, then those companies could see their profits fall. And as you guys know, we believe that stock prices are a reflection of profits. And if those profits fall, then those stock prices will go right with them. So this is not a good picture. It actually strengthens our forecast, our fearless forecast, that the Dow will go to 25,000 before this is over. And that would be a 20% drop from here. So not a small amount from here. The other thing that's also happening is that the Fed is raising interest rates, or they're going to probably raise interest rates 0.75% this month. And what that does is it causes the cost of money to go up. And when the cost of money goes up, companies who borrow money to buy inventory, hire people, build plants, do all that kind of stuff, they find the cost of money more expensive. They do less of all that stuff, and therefore they grow less rapidly. And it's a vicious circle that feeds on itself with the consumer and then the companies and all of those kind of things. And we could see stagflation hit us. And as you know from previous videos, stagflation is like cancer for the economy. Inflation or rather recession is like the flu. Stagflation is like cancer. Hopefully we'll only have a recession out of this. But be that as it may, the picture is ugly. We're going into earnings season right now, and several companies have already pre-announced. The news is so bad, they wanted to get it out right away and essentially rip the Band-Aid off. But we think the earnings season is going to be ugly, and the guidance going forward will not be pretty either. And so once again, it feeds into what we think, which is we can see a big drop from here. So if you're over 50, if you are retired or retiring soon, our view is, and as you know, we have our invest and protect strategy, and we've actually gotten out of all stocks and out of all bonds for quite a while now. And we believe that that's still the place to be. We think cash is king right now. And with the Fed raising interest rates, cash should be paying a higher interest rate soon. And so that also helps us. You know, there's an old expression that says, don't fight the Fed. And usually it's meant in a good way, which is the Fed is trying to improve things. And so don't go against them. Don't think it's going to get worse when they're trying to make it better, because they always win. Well, guess what? The opposite is true right now. They're trying to make things worse to get inflation down. And so if you stay in invested, you're fighting the Fed in our view. And so cash, we believe, is king. I encourage you to visit with one of our retirement planners and discuss your retirement plans. If you're over 50, this is a time to really look at protecting what you've got and living to fight another day in our view. So if you want to share this video with your friends and family and business associates, we encourage you to. We want to help as many people as we possibly can. So please visit with one of our retirement planners, and hopefully we can help you as well. Thank you for watching this video, and we'll talk soon.